Welcome to the daily update, where I'll go over the action in the market for Tuesday, August 26th, and we'll see how things look for Wednesday, August 27th. Okay, we're kind of right back to where we were at the start of Monday's session. We're treading water at this point, but we're still positive on all three time frames, but we're still below overhead resistance. Now, we'll see what happens on Wednesday. There's not much in the way of economic reports. The big anticipation is going to be after the close when Nvidia comes out with their earnings. And that's going to gyrate the market one way or the other. And so the market is just kind of holding back. We're not really seeing that much of an improvement, even though it was an up day. But we're not seeing a further deterioration either. We're just kind of treading water right now. So right at the open, we did have a lower open, and prices did set the intraday low right at the open, right about at S1 at 64.29. Then it was able to rise above the unchanged level and hit resistance at the daily pivot. And that's why I really stress that these pivot points, which we know ahead of time, to really watch those. And I update those on the YouTube community tab every day. I update them within the newsletter that I have and also on the website. So it's a tool that's right there and it's available. Anyway, so we did hit resistance at the daily pivot at 64.48. Then we declined back down to the unchanged level, which is a support level. And then we climbed above the daily pivot later in the day. So we saw some late day buying and we closed above R1 at 64.58. We were up 0.41%. Now we were down 0.43% on Monday. So we're just kind of coming back to where we've been before. But the one thing is we were above average with volume. We did see a pickup there where we've been consistently seeing below average volume. We're positive on all three time frames, short, intermediate, and long term. Interest rates tick down, and we're going to get some more reads later in the week on inflation. We're going to get the inflation component of GDP. Now, we've seen that before. We'll just have to see if there's been much of a change. And then we're going to get the core PCE on Friday. And so there's some anticipation about that. Is it going to feed into what we saw with PPI week before last? And that's what kind of started this whole concern about inflation. We're not seeing it at the CPI level, but we are seeing it at the PPI level. Is that going to bleed through to some of the other inflation indicators? Nothing really happening right now as far as the tariffs and trade deals. What's going on now is more back and forth between Trump and the Fed, and I'll address that here in just a moment. So, Trump did fire Fed Governor Lisa Cook. Of course, not going to say, okay, I'm going to leave now. It's going to be challenged, and she will not resign from her duties, setting up a legal battle. Now, there's some constitutionality that's in this whole thing. The Fed is supposed to be an independent body, even though the president chooses who is on the Fed. But it's kind of like Supreme Court judges. They're really appointed for life, but it says good behavior. Well, there's been some issues that have come up with Lisa Cook, and Trump is going to have to battle around that and see how it all plays out. He said that he knew there would be a legal fight. You don't think she's just going to roll over and say goodbye. And Trump says that he's prepared for it. He already says he has somebody in mind to replace her, and this might flip Stephen Moran to her seat since the term is longer. Okay, so there's some maneuvering going on there. Now, mega caps didn't have a great day, and we didn't see a real improvement, but they did outperform the rest of the market. And then small caps had a pretty good day. We're starting to see a golden cross on the S&P 600. Way back at the beginning of August, we did see a golden cross with the Russell 2000 small caps. Now that's being confirmed. Now that that's happening, all the major indexes that we follow are in uptrends. Now, is that going to really mean that we are going to go straight up from here? Not necessarily, but it does mean that things are shifting over. And for the first time in a while, we have all the indexes looking positive and seeing a little bit of a momentum pickup, but not much. The Williams percent R, that's the only short-term indicator that's looking extreme right now, which is showing a little bit more conviction, and the stochastics are turning back up. Where they went down after Monday, now they're back up after Tuesday. They're pretty touchy little things there. And then we still have the Sean trend meter, which is now leaning a little more positive. It had been leaning a little more negative after Monday, but it's showing that there's some conviction. But our list, both in the short and intermediate term, it's not very long. So you take it all together, and there's just not a lot of conviction currently. No change to the scenario. We'll see if something happens. It's pretty much figured into the market now that there's going to be a rate cut in September and a high percentage. We look at the Fed Watch tool for that, and I go over it in the weekend video. But there's still a lot of economic reports between now and the time the Fed makes that decision. So we'll see if this scenario gets adjusted at all. The dollar was down, which helped stocks to go up, and interest rates were also down. We're right back to where we were before after last Friday. We're at 4.26%, where we had been at 4.28%. And we ticked up one notch. We're still looking positive as far as sentiment, not extreme. We get more concerned if we get up to around that 75 level, but we did tick up from 59 to 60. And we are positive with our trend, but it's still a weakening trend. The ADX is still below the moving average, but we're still above 20. So we are trending, and we have the green line above the red line. With the update, the bias is positive. I'm still keeping the momentum at mixed. We've been just chopping along sideways for the last number of days. There's some things to be concerned about. There's some things to be positive about, but it's just really lacking conviction currently. All right, we did get durable goods orders, which came in much stronger than expected, up 2.8%. They thought it was going to be down 3.5%, and we saw a big hit last month, and this was causing some concern about economic growth, where it was down 9.4%. So to see a rebound is more encouraging economically. You take out transportation, also up more than expected at 1.1% of an increase there. They thought it would be up 0.1%. Last time it was up 0.3%. FHFA housing price index is dropping. So people that are looking for a house might like that. It was down 0.2%, more than the 0.1% decrease they thought would happen. And last time it was down 0.1%. And we're also coming down a little bit here, lower than expected with the Case-Shiller home price index. It's still up, but up 2.1%, less than the 2.8% increase they thought. And last time it was up at 2.8%. Consumer confidence did tick up to 97.4. They expected it to come in at 96.3, but it's down from 98.7, which is what we saw last time. So here are the durable goods orders, which are coming down on a year-over-year basis. So what we're looking at is the month-over-month basis in the number I just read off. So this is still showing longer term a little bit more weakness. Then when you take out aircraft, we're just pretty much flat right now after we had been coming up. And then month over month, this is where we saw less of a decrease than what we saw last time. And the housing price index is starting to drop off. We saw this kind of top out in February and March, and it's been starting to come down here, as has the Case-Shiller home price index on a year-over-year basis. And that's kind of the problem that's been in the housing market is housing values are going up and interest rates are going up, and it's pricing people out of the market. So to see this coming back might actually help things a little bit. Then consumer confidence, the blue line, that's the total reading that we come in with here. And it's still below 100, tick down just a little bit there. And then we look at the present, that's the purple line, where it's drifting down just a little bit, and also a little bit of a tick down looking out into the future for expectations. Then this is the weekly chart of the longer term overbought, oversold composite. We did drop down a little bit, but we're still getting very high at 86.64. It really becomes overextended if we get above that 90 level. So this turns red when it starts to get extreme, when it goes above 70, and we're still in that area overall. So longer term, we're still looking at an overbought condition. And then announced and actual buybacks. Again, companies will come out and say, we're going to buy back our own stock. That's the blue line. It's dropping down a little bit there. And then the actual buybacks, that's the green line, are pretty much flat. So we're not seeing as much right now. Equity positioning still above zero, had been going up, did drop down in the latest reading. Discretionary, which is where you try to time the market a little bit, that's the green area here, and not as positive. Where if you use a systematic strategy where it's like, okay, I just get into the S&P 500, I put my dollar cost averaging into effect, and I just follow the market. I don't really try to time it or anything. When we're in a more solid uptrend, the blue line, that tends to outperform. When we're going down, we'll typically see the green line outperform because people get out instead of just riding the wave. And equities typically rise when the Fed resumes cutting. Okay, so we have to look at why are they cutting. That I constantly say that over and over. If they do have a rate cut, and right now it's looking very likely that will happen, what's the context? Is it to just help an economy that's doing well and to help the economy do even a little bit better? Or are they cutting because there's economic problems? The whole context is different as to why the Fed might be cutting. The 10-year yields have been range bound, and we've been seeing that. We've been watching that 4.5% level on the upside, and it's rarely trading below 4.2. So we've been just bouncing around lately, kind of like the market has been. But this has actually gone on for longer, and it comes and goes. I look at this all the time, but I don't put moving averages on the yield here. And then China's stock performance tends to correlate with M1. That's the money supply on a year over year. It was updated at the end of July. Okay, so all right, when M1 is going down, the Chinese market's going down. Well, M1's going up as the Chinese market's been going back up. Then the equity allocation still high, above 70% here with commodity trading advisors. Then we get this. And as I say over and over, valuation doesn't seem to matter until it does. So you really can't use it as a timing mechanism. But we use that 10, 15, 20 scale, and the S&P itself is still above 20 at 22, so it's expensive. And then there are three of the 11 sectors that are actually even more expensive than the S&P. And these are growth areas, information, tech, and discretionary. Now, industrials is more economically driven, but that's also considered to be expensive. Even staples are above 20 in materials as well as communication. So, and communication is a growth area. And then you have the other areas that are not as overvalued. They're more fairly priced, but they're the more defensive areas. Then the rates, gold correlation exists because ETF flows and rates have been tightly correlated. Okay. Well, they were sticking together here. Then we got into 2023 and into 2024, and they've just kind of shot off in opposite directions here. The mortgage spread, which is actually coming down, and which is good if you want to buy a home. You want to see this tending to drift lower. And then after you buy your home, you want to see this go up. Then labor market differential, consumers see increasing slack in the jobs market, but there's other data that suggests the employment market is still holding up quite well. The labor differential continues to soften, falling to a fresh low. Okay, in particular, we saw a notable jump in those saying jobs hard to get. So this is jobs aplenty, jobs harder to get. Then there's a lot of money going into the Russell 2000, and that's the small cap index. But we've been here before. All right. Now this chart doesn't go back all that far. We shoot to the upside and a lot of money goes into small caps and then they fall back. Well, are we in a more interest rate environment that's friendly to small caps right now? That's what they're anticipating at this point. Smaller companies like it when interest rates are lower, that they don't have to pay out money in interest that can go into growing the company or to actually earning a profit. And revisions breadth, the percentages of S&P 500 companies with positive 3-month changes in forward revenues and forward earnings have increased. This is an Edward Yardeni chart, and that's positive. When things are shifting and it's making earnings do better, that suggests that the S&P 493, now there's really 503 stocks and they have the Magnificent Seven, and okay, but they still come up with 493, should do well. That's one reason why we're seeing the rest of the S&P starting to perform better, because their earnings outlooks and their changes are looking more positive. Okay, so thought it was going to be kind of a quiet day, but later in the day, we did see some buying coming in. We set the low right at the open. We had a lower open, but we held support at S1. Then we kind of hung around the unchanged level, but then had a difficult time getting above the daily pivot. Then we dropped back down, and then right after that is when we broke above the daily pivot and closed at the intraday high. But you can see the last number of trading days here, we were just kind of on a treadmill. And not much of a change in the initial overnight session here with the futures. And we're seeing most of the movement still coming within the trading session itself instead of gapping up or gapping down as far as the futures. Now, that might change after Wednesday when NVIDIA reports because everybody's going to freak out one way or the other about that report coming out. And we're seeing a little bit of an improvement here where the blue line and the red line are more matching up with each other, where we were seeing the red line well above the blue line, showing that the market was getting more defensive. Seeing, and it's not that we're seeing a lot of strength in the blue line right now. It went up near the end here. It's more of a drop off in the red line, which is the intraday value chart for the large caps. We are seeing an improvement here with the S&P intraday growth to value ratio, where we had been seeing more weakness. So this is improving. But we look at the end of day charts here where growth was up more than value. It was up more for the mid caps and it was up for the small caps where value was actually down. So seeing a little bit of a tick up, but there's been a bit of a damage done with the small cap growth to value ratio. We're below both of the moving averages. We're below the 50 period moving average of mid cap growth to value, but a little bit of an improvement there. And below the 50 period moving average with S&P growth to value, but also a little bit of an improvement. In the bigger picture, though, we are still in an uptrend. A little bit of an improvement, but still at the inside the rainbow here with this growth to value ratio, but it's at the upper end of the rainbow. This is where we're seeing some improvement. And I tried to point this out yesterday. We'll have to just see how this plays out. When we had that big down day in August of 2024, a year ago, when the VIX really spiked and everybody was thinking it was the end of the world and everything, right after that happened, once that whole mess got settled, and you knew it was going to pass quickly because it was pop news and everybody was freaking out, those things tend to not last very long. If you take from that point going into the end of 2024, discretionary was the best performing sector in the market. Well, we're seeing an improvement again here. Now, there's at least yet, there isn't an end of the world day that's happened first, but we are seeing an overall improvement. We're seeing a pullback in the staples, and so our discretionary to staples ratio is improving. And this is the equal weight version of this ratio. And I have some other charts to show later on to talk about that. But we're still positive here in the short term. The green line is above the red line, but we're in a weakening trend because we're below the moving average. Also below the moving average with the intermediate term, but we're positive with the green line above the red line. And we did pick up a little bit here with volume. We actually saw a little bit of green here when we look at the average volume for the S&P. And we're still looking okay here with the VIX, just pretty much sideways with the line chart, and we're still below the moving averages with the bar chart. But this is what we've been watching for. So far, this just hasn't happened. When we get into August and into September, we tend to see the VIX really going up, which means stocks are going down. Not happening, at least yet, but that could change at any time. And we're also dropping off a little with the VIX of the VIX, the volatility of the VIX. We're below the moving average with the bar chart as well as the line chart. And we're seeing a little bit of a pickup here. The market's anticipating something. This could be ahead of NVIDIA, and they're reporting their earnings. The skew index, which is a variation of the VIX, but it uses out of the money options when it's calculated. We're back up into this red area where we had dropped down below it. We saw a little bit of a tick up here with this fear gauge and the other fear gauge too. So some non-confirmation there. These fear gauges are going up where the other sentiment gauges that we look at were declining. An improvement here with a high beta to low beta. In a more positive environment, we want to see this chart going up. This is the other chart I want to show, where this is the weighted version of discretionary to staples, and that's improving as well, in addition to the equal weighted version of discretionary to staples. That's why I wanted to show this chart. We are seeing a bit of improvement, but still underperforming with the tech to utilities ratio. Not much of a change with biotech to healthcare, and we actually went down a little bit when we look at hotels to utilities. I wanted to stress the two top charts in this particular chart that I show here. This is still looking pretty good too. We're breaking out a little bit when we look at the SPY to staples ratio. This shows the market is getting more offensive rather than defensive. When we were coming down at the end of 2021, then we went into a bear market. And we were coming down last spring. We were able to work out of that, and we're actually setting a new high with this ratio. And not much of a change here with the daily equity put call ratio chart. We're going down with the 5-day chart. We're also going down with the 10-day chart, which is slightly more positive. And ticking up, but we're at the lower end of the band here when we look at volatility risk premium. So not really any increase in fear there. But we didn't see really any improvement with the advanced decline line. We were flat based on price, flat based on volume, but in the bigger picture, though, these are still positive, still above the midpoint with the advanced decline ratio, and we actually declined a little bit, but we're still above zero with the advanced decline oscillator. And a little bit of a pickup from Monday's session with the new highs, a slight expansion of the new lows, but the 5-day chart and the 10-day chart starting to level out here, but the 5-day chart continues to go up. So internally, we're holding up. And we're back to looking more positive now with our three smart money indicators. We're back above the moving average of the boom indicator, and we're going up here with the indicator, the accumulation distribution indicator itself. And very choppy here with the Chaikin money flow. We had an upward move here, so the red line is now going back up, and the Chaikin oscillator is now going back up. Came down a little bit with the green line, but the vortex is still positive in the bigger picture. Longer term, the 10-day average of the highs and lows for the S&P were above this green line. That's showing longer term strength inside of the S&P. Still above the moving averages here with all the different advanced decline line studies, but not much of a change. See how we were pretty much flat. Slight increase here with the S&P. And those stocks above their 20-period moving averages actually declined. We declined on Monday, we declined again. So this just means that not as many stocks are participating where we were seeing more stocks participating to the upside. And we declined with the 50-period moving average study. We were flat with the 100, and we were up slightly with the 200 moving average study. So not really any changes there. We're still back to dealing with these pivot points. We just cannot seem to get above that. And when we look at the weekly chart, that's at the 64.68 level. Now we're at 64.66. We closed last Friday at 64.67. Yes, the market knows this is here, and it's going to take some big catalyst to either break us above that, or we're in danger of just going down from this overhead resistance. Maybe it will be NVIDIA's earnings that will push things one way or the other. And on the bottom, we were finally above average with volume. And we declined a little bit with the 20 moving average study here, a little bit up with the 50, and we were flat with the 200. Coming back above the midpoint with the Stochk RSI, we want to see this up here in the top area and staying there for a while to show more positive short-term conviction. We're just chopping around the midpoint right now, but we are looking fairly positive here with the Williams percent R. We're above the midpoint, but pretty much flat here with the CCI 14, and we actually declined a little bit with the CCI 20. And the short-term stochastic, above the moving average, getting extreme, back to extreme again with the intermediate short-term, flattening out here and still looking more negative with the long short-term stochastic, and slightly above the midpoint with the force index. Still looking okay with our short-term trend based on 20 periods. Both the green line and the blue line continue to go up. And we're slightly going into the +2 channel with the standard deviations chart. And kind of flat here, but still positive with the balance of power. Positive with the go, no go with the darker blue bars. Still above the midpoint with the highest high value chart. We're at day 81 in this current uptrend, according to the Landry Light system. And that's a long time. Usually when it gets above 40 trading days, that's when it looks a little bit long. And we're positive here with the proper order. And the TTM squeeze continues to go up with the lighter blue bars. That's positive. And still kind of flatlining here, but slightly above zero with the ease of movement. Still above zero with the Arun indicator. That's positive. And we just barely ticked up with the McClellan oscillator. We're still below zero there. This is one of our major indicators, what I call a primary indicator that's still negative. So we've been really choppy, but now we're declining based on price and we're declining based on volume. So we're not seeing a across the board confirmation that we're positive right now. And we were flat, but slightly positive with the NYSE McClellan oscillator. So really choppy, but going up now with the summation index based on price and volume for the NYSE. We're still negative though with the Sunland Trading Oscillator. We're declining based on price and volume. Still negative with momentum, with the PMO below its moving average. Flat based on price, negative based on volume. And that's been part of the recent negative divergence that we've been seeing, where volume just hasn't been matching what price has been doing. And we were flat here, but still above 50 with the PMOs that are rising, that are inside of the S&P. We continue to go up with the buy signals, though, and a little bit of a tick up here with the PMOs above zero. Still positive, but chopping sideways right now with the Elder's Impulse system. Still positive with the Parabolic SAR. And we're positive here with the slope oscillator. This is short term, very touchy, starting to get a little bit extreme here. But we're still negative with the MACD, which is more short to intermediate term. So we're seeing a bit of a negative divergence, or just a divergence. We're going up with the slope oscillator. With our other short-term oscillator, the TSI, it's continuing to go down. So they're not confirming each other. Our three intermediate term oscillators continue to drift lower, and we're still drifting down with the two long-term oscillators, the TRIX and KST, where we're slightly positive with the copy curve. So not seeing real across the board confirmation there. The Shun trend meter in this darker green area and continuing to go up. That's positive. Still above 50 with the money flow as well as the ultimate oscillator. Trying to get back above the moving average with unbalanced volume. Still above 50 with the intermediate and short-term RSI charts. And still looking good here with the bow tie. We're still above this fluorescent green indicator here. That's a 10-period simple moving average. So we're holding up. We just kind of topped out, went sideways, came down a little bit, starting to come back up, and not really going anywhere overall. But we're still looking okay with the 50-period moving average study here. The red line and the blue line continue to go up. That's intermediate term. Still above all the plotted moving averages. Still continuing to go up with the bullish percent index. And we've been seeing some strength in that. Even with the down day on Monday, this continued to go up. And that's encouraging. That means there are buy signals on point and figure charts that are being generated inside of the S&P. And we're going up with the NYSE bullish percent index, and we're back barely above 50 with the NASDAQ 100 bullish percent index. And this is a Pring bottom fisher buy signal that was generated a week or so ago. I don't use this all by itself. We use other charts to confirm things. This is the chart that to me is still, for going on 3 weeks now, this is what we've been really looking at. Notice how we came up to this R1 pivot point, which is at 64.68. And we may go above it for a time, but we cannot seem to close above it. And we'll see if something happens, probably either in Wednesday session, but after the close, are we going to be able to break above this, or is this overhead resistance still going to cause a problem? And we're still at the upper end of this trend channel going back to 2009. That's likely adding to the overhead resistance. But we're still positive with the Heiken Ashi. The Keiki chart is positive. The Renko chart is positive. But we're still negative with the three-line break chart. So not across the board strength there. And we're still looking good here. We've been declining a little bit with the 150 and 200 period moving averages. We went above this red line. Now, there's nothing magical about the red line. I put this on here, and it's just when we get above these red lines, it's like, okay, we're looking a little overextended, but it doesn't mean it's going to stop. Now we've been dropping down below these red lines. So it's still positive on all time frames with all the different indexes. Bonds are negative in the short term and long term, back to being positive in the long term. Commodities are positive across the board, and we have the dollar, which is now in a short term uptrend. And we see here industrials and then financials. We like that that's doing better. The ratio's improving, that I'll show here in a moment. But healthcare, seeing a little bit of favor there, with discretionary doing well. And then staples, they were the worst performing sector. That's why we're seeing the discretionary to staples ratio improving. Tech was up, but then we had communication, another growth area. It ended up being down. So we had a tech BPI cross above 50 right after the open, but then the NASDAQ dropped below 21.4, although it did cross back above 21.5 and Canada set another new all-time high. So just still below this pivot point here with the Dow after setting an all-time closing high on Friday. We haven't been able to get back to that point again. And we've gone from neutral back to positive, though, with the diamonds, with the Elder's Impulse system. We're also dealing with overhead resistance, but it's a little further away when we look at the NASDAQ here. We're in an uptrend and we're looking okay. This support level held here with this pivot point, but we have not been able to break above this pivot point resistance level. But we're still positive after we've been going kind of sideways the last few days with the NASDAQ. Also, it's hard to see because this big P is here, but we also have overhead resistance with the NASDAQ 100, but it's still positive, and we've gone from neutral to positive with the Qs with the Elder's Impulse system, but the momentum continues to drift lower, and it has since the latter part of May, right around Memorial Day. We haven't seen really strong momentum for the NASDAQ 100. And we're slightly above the 20 period moving average. So this is turning this back to more positive. We lost that last week and then we gained it back with the strong up day on Friday. We closed right on it on Monday. Now we're back above it after Tuesday. And we're still above this longer term trend line on the NASDAQ 100 weekly chart. Here's where we're seeing the golden cross. With the S&P 600, we're already on a golden cross here with the Russell 2000 small caps. That was generated at the beginning of August. Positive with the Elder's Impulse system for the small caps, kind of chopping along sideways now with the mid caps, but still positive with the Elder's Impulse system. Coming back, not quite setting a new all-time high. It's pretty close though here with the broad market Wilshire 5000 as well as the total US stock ETF. Financial sector up, setting a new all-time high here. Looking good all by itself. And we are improving. We're getting back up to the moving averages here with the financials to S&P ratio, but we want to see this continue to go up. It has been drifting down since about May and really underperforming the S&P. If this could come back and start to outperform again, that would help the market be even more positive. And not back to an all-time high with the FANG index. We're still above the 50-day moving average, though. So Apple was up 0.95%, and we had Amazon up a third of a percent. Microsoft was down, starting to drop a little bit below its 50-day moving average. Google was down 0.65%. Meta was virtually unchanged, slightly higher, still above its 50-day moving average. Nvidia up a percent, a little bit of buying going on ahead in the earnings report here. And this is going to be the big story stock, especially after the close on Wednesday. And Tesla had a pretty good day, up 1.46%, but it's been really, really choppy lately. Netflix up 0.2%, coming back up to its 50-day moving average. We are seeing an improvement here. Staples are back to underperforming the tech sector. When this ratio is going down, that's more positive. And we're seeing this ratio going up with the semis slightly outperforming the tech sector. We want them both to do good, but the market is more positive when this ratio is going up. That means the semis are outperforming. We'll see how it goes after Wednesday's close. And then looking at the US to world relationships here, dropping off in the short term, but still keeping it going up slightly here with the longer term correlation. Oil down over about 2.3%, getting into the lower end of the mid 60s there. And the dollar, it shows it's up here, but it was actually down during the session when the market was open, but we're still above the 50-day moving average. And dropping down just a little bit here with the 10-year yield. And we were up just a little bit here with the 10-year based on price. Not really seeing anything strong right now, but it is improving when we look at the Q to S&P ratio. That's a growth to value ratio that we follow. This one is looking more promising. Discretionary to the S&P, we are turning up, but still below a declining moving average when we compare large cap growth to value. So we're coming back up to the moving average with the large caps, flattening out, trying to turn up with the mid caps, and ticking up just barely below a declining moving average with the small cap growth to value ratio. And this is also encouraging. We're seeing the staples underperforming the S&P. And when this ratio is going down, that means the S&P is outperforming, and that is positive. So we're still positive on all three time frames. We're looking a little less defensive, but we're not seeing a really big improvement either right now. The big thing that I see is the overhead resistance right now. We just cannot seem to close above that level. And as I said multiple times now, Nvidia will report earnings after Wednesday's close. And real light day as far as economic reports. The MBA Mortgage Applications Index, we get that every week. And then anything that may happen, maybe I should put the Fed in here, but that doesn't seem to be really having much of an impact. That's just seen as a political maneuver right there, but not really anything developing with the trade deals, tariff news. There's all kinds of things going on geopolitically, but it's not having an impact on the market. And then we'll have kind of a big day on Thursday with jobless claims and continuing claims, the second look at GDP. Then we're going to have a big day on Friday with core PCE, with personal income and spending and consumer sentiment. And so they have, I don't really follow the crude oil inventories here. So I just haven't found it to be all that impactful. But then bigger reports are going to be coming out on Thursday and Friday. Seasonally, though, we are quite positive. When you go back to 2002 for August 22nd, 27th, we are really positive here with the Dow, S&P, and NASDAQ. And then we do see a little bit of a bounce here. The post-election year weakness really, it was developing a little bit, but now we're right back to where we were before. And last week we were developing weakness Monday through Thursday, and then we had the big up Friday. So we'll see if some positive seasonality, a little bit of a bump up here. We have a little bit of a downward move here, and then we're right back to where we were before when we look at the green dashed line for the S&P. And we'll have to see. Are we going to end up having a positive August? We're running out of trading days here. This also shows going back to 1950 how post-election Augusts tend to be weak. Also, weak seasonality that just has not materialized, at least yet. Now we're still looking negative with the McClellan Oscillator and Summation Index for the S&P. We're positive with the NYSE though. The Swelling Trading Oscillator is still going down, and we're getting kind of a mixed picture with our oscillators, even though the Copic curve is still positive. And the momentum for the NASDAQ 100 continues to be negative, and we're still dealing with the Zohorchak method sell signal. It hasn't changed. It's at a -6. It had got all the way down to a -10, but it is improving to at least up to -6. And now we have our three smart money indicators back on the positive side now. They're showing some improvement. The growth to value ratios holding up, but showing shorter term weakness, but longer term they're still positive. But we are seeing a real improvement with discretionary to staples. And here where the McClellan Oscillator and Summation Index for the NYSE is still positive. The parabolic SAR is positive. The bullish percent indexes are positive. Ease of movement, money flow, ultimate oscillator, and vortex. And if you're new to these videos, I have them in gold. These are what I consider to be primary indicators. Secondary indicators are in white. If you go back over, I don't want to go through this. The yellow one, the Swelling Trading Oscillator, I put that in between a primary and secondary. All right, and then the financial sector by itself looking good and improving when we look at the performance to the S&P 500, and we do have a Pring bottom fisher buy signal and the long-term special K oscillator. Daily chart and weekly chart are both positive. And here are the pivot points to follow in Wednesday's session. So our conclusion, positive but dealing with overhead resistance. We are positive in the short term, not really seeing any conviction. I just have us as flat out positive in the intermediate term. There's some positive things, there's a little bit of negative things, but no real conviction there right now either. And we are still positive in the long term. Thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.